Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's video, I'm going to be going through various different charts as I normally do. But today I'm going to go through one chart which you can see in the title of this video. I'm going to show you a chart that's never been wrong and the signal it's giving you in terms of whether we should be buying or selling or doing nothing at all. Also, I'm going to be showing you the Wall Street cheat sheet. You may have seen it. And what it's showing is the various emotions people go through when the market is on the up as well as on the way down. I'll also be looking at the bars pattern from 2018 and see exactly whether the current price action is still playing out as it did in 2018. So if that sounds interesting, then without further ado, then get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. But before I do that, the usual polite reminder, please remember everything in the videos is for educational purposes and nothing should be taken as financial advice. Please do your wider research and your due diligence before you make any investment decisions. Before I go into the charts, I just want to make clear a few things because reading some of the comments, I'm getting the impression that people are picking up the wrong messages in terms of what I'm saying. Either they're not watching the full video all the way through, or they're just picking up bits and pieces while they're doing something else and not really getting the exact meaning of what I'm trying to say. So let me make things very, very clear in this video. The first thing to note is that please always remember that no one knows the future. I can tell you from my side that I don't even know what I'm going to have for lunch. I don't know what's going to happen in the next minute, let alone in the next few days or weeks or months. Anybody claiming to do so, you should keep well away from them. The second thing to note is that please remember all markets. If you're new in this market, you will realize very, very quickly that all markets are characterized by possibilities and probabilities, not certainties and guarantees. And this is one of the reasons why I'm always saying to people, please be sensible and not follow any one person on the YouTube, and why you must always do your due diligence and your wider research. And that way you can take your own responsibility for the decision that you make based on that wider research. And because no one knows the future, my job is to just give you my perspective of what I see in the charts based on the possibilities and the probabilities that might be attached to whether the price is going to the upside or to the downside. So what I try to do is give you my opinion of the likely direction of the chart by giving you a percentage probability of what I think is going to happen. And it is an opinion which can obviously go wrong. So I was quite horrified to read in the comments that some people who are watching my videos think that I am saying that the market is going to crash down to $12,000. And yet in every single video I've said very, very clearly that my opinion of the probabilities of what could happen here is that this $17,500 bottom that we had on June the 18th, my own view is that 75% probability that this is the bottom before we make a move to the upside for the next bull run. But I've also presented with many charts the possibility and the probability of 25% that it could go down there. So my overall riding view and opinion is that the bottom is already in at 17.5. And I've also said very transparently that 75% of my long-term position has been invested at these levels here. And I'm very happy to hold them if the price goes down to 12,000, at which point 25% I will buy in this region here. And if the price doesn't go down but has bottomed here at 17.5, then I gave you the various levels at which I would be prepared to accumulate the other 25% in order to average up. So that to me is very, very clear that my overall view is that the bottom is up 75% probability. However, as I've shown you with the monthly chart, especially at the end of September, which closed slightly below the neckline, the support line, that would give the odds a little bit to the downside. But still, my overriding view is that the bottom is in here, and that is the way I'm acting in terms of my investments here. Okay, so with that out of the way, I'm going to go into the various important charts. The first one is this chart here. Not many people on the YouTube show this. However, it is an incredibly important chart and gives a very important, accurate picture of what's happened in the past. So just to explain very quickly, the LTH is the long-term holders. The yellow line here are the people who are selling their Bitcoin. And above the blue line here, the people who are selling above this blue line are selling their Bitcoin at a profit. And below this blue line are people who are selling their Bitcoin, having accumulated them at higher prices over here. They're selling them at a loss. at these levels here. So the blue line is the break-even point at which they're selling. And as you can see, when people start selling their Bitcoin at a loss, down here in the red zones, as you can see here, that is where usually the market, the price action for Bitcoin bottoms out. This was back in 2015. This is back in 2018. And here in the COVID situation, people panicked and started selling their Bitcoins here, thinking the price is going to go lower. And here as well, currently this is what's happening. At this price range here, there's a lot of selling at losses of Bitcoin. Maybe they're hoping to pick up the Bitcoins at a cheaper price, so they're selling them here. And this is a mistake that a lot of people make. When the market is at the bottom of a bear market, because they've now got it in their minds that they've watched the price go lower and lower and lower over a sustained period of time, people lose the patience and think, well, it's been going low all the way down here, better I sell at these levels and pick them up at a lower level. And hence that capitulation of that 12,000 people keep talking about. And the majority are thinking that the market is going to go much lower than the current prices, maybe to 12 or 13 or 14,000. And I've even seen people band about 3,000 and 4,000 and 7,000 as likely prices where the Bitcoin price could go to. And based on that information, people sell here at 19, 20,000, hoping to pick it up at 12, 13 or 7 or 3,000. But this is exactly what happened here. But what the market does is it takes the contrarian view. So when the majority are thinking that the market is going to go down, the market goes up instead, and here as well. So what this is saying really now is that this has been accurate, as you can see, at 4 points since 2015. And this is the current box here. It's basically saying that we have bottomed out. However, if you notice the lines, we came to the bottom of this line on this one, very close to the line on here, and we're not quite there yet. So there is that possibility that we could go a little bit lower yet. However, please always remember, and this is the psychology of the markets, you're never ever going to get Bitcoin or any other cryptocurrencies at the very, very lowest. And you're never going to be able to sell them at the very, very highest. It's just a mindset problem that people have. And the sensible people are the ones who actually accumulate and dollar cost average at these prices. Like I said, it's not financial advice. I can only give you my perspective. This is what I'm doing, and that's why I'm 75% invested at these levels. And I'm very happy to carry it down lower if the price goes lower. That's fine by me, and it's something that I'm prepared to do. Maybe other people are not prepared to do that, and they're going to wait until the prices go lower. And there is a risk and consequences of doing that, and that is that you miss the move that could go to the upside rather than to the downside. And then you're chasing those prices higher and higher. So the psychology, if I go to the cheat sheet on the Wall Street, if you look at this chart, this shows you the emotions people go through. And as you can see, it starts with disbelief here and goes all the way around to disbelief when the market starts taking a move to the upside again. So here we have it, that at the bottom of a bear market, when we get a rise in the market here, people do not believe that this is really the start of a bull market, because what they're thinking is that this rally will fail like the others, because that's what's happened on the way down here. That's the psychology. People behave in patterns. So the pattern of thinking, when this goes down and then up a little bit down, and so as the market moves down, goes up a little bit, then moves lower than the previous low, then moves up a little bit, but lower than the previous high, etc., until it goes to the bottom. So by the time you get to these levels here, at the bottom of a bear market, you get to a point when the market does actually start to go, you're in a disbelief phase. And then when it goes a little bit higher, then there's a little bit of hope that's coming in, saying whether maybe the market is recovering a little bit. But by the time the market's gone up by 30, 40, maybe 50%, people start to believe, and there's a little bit of optimism, that maybe this rally is already real. But they've missed this big move there, because at this point down here, at this point here, at the bottom of a bear market, people believe the market is going to go lower, because the market conditions them to believe the market is going lower and lower along this 1 year bear market that we've had. And the question is, where are we here? This would be your 17,500 if that is actually the bottom. Or this could be where we are here, and this is the 17.5, and this could be one more leg down before we start moving up. And the question is, if you're going to go over here when this market goes to the upside, this is the top of the bull market. So whether you buy here or here, you're not going to miss this big move. by a lot. And that's why it pays to actually just accumulate in these regions. And this is where people start to sell below this blue line at a loss, with a view that either they're going to get out of the market and they've had enough, or that they want to buy at a lower price because the market seems to be just going lower and lower. So the whole point of this is really just to say you have to be very, very careful at these levels. And this is where the market is currently, at exactly the same point as it was in the previous end of bear markets, which is usually the point where the market starts to rise up again. Okay, a quick rundown on the time frames and what's happening in the charts. So I hope you found value in that information, and if you did, then please do remember to like and subscribe and to turn on the notification bell if you haven't already done so. And one of the important charts is this one here, which is the weekly chart, and the blue line is the 8 EMA. The Bitcoin does respect this quite a lot. As you can see, it's been using it as resistance over here, and then as it came down from this breakout, we've had resistance all along on this exact line all the way down here. Again, we had another fake out here, and yet again we've got rejected right on these lines here. And in the current week we went above it again here and got rejected so far, and that level is at 20,300 or 20,400, around there. So that is a very key level. If you look left, you'll see that this candle was coming up to that level and got rejected. And then these are the support lines here as well around that time at 20,400. So be aware of that. Once we break up above that, as we've seen from here, it could easily be a fake out. So it is giving us very important information. And that is why that level I've given you in the last many videos at 22.5 is an important level, because once we get above this, we'll have cleared the 8 EMA and cleared this downward sloping trend line, and that will be confirmation that we're going to much higher levels. But there is this level here as well at 25.5. Based on this candle here, this wick came down all the way down to 25.5, and that's where we got rejected, right here. So this level as well. So these are the two major levels, and I've noticed at the 20,000 level, we're just getting chopped up, is going up and down the 20,000 level, trying to actually shake people in and out of the market there. And we can see that on the 4-hour chart. In the last few days, it keeps going up to around about the 20,300 and keeps going down to around about the 19,800 level down here. So this is impossible trading conditions, because it's just going to take you out all the time. So just be careful if you're trading around here. A quick look at the dollar. As I showed you in last week's video, it looks to me as the very top is going to be anywhere around here at around about 120 level. And currently we're at 111, and we've been as high as actually 114.15. So we may still have a little bit to go there. However, we are getting very, very close in this region. Either we're going to be making a move to the downside from where we are. So with the target interest rates at 4.4% with the USA government, it may be that there's a little bit more room to go for the dollar. And maybe that's the time when the cryptocurrencies will start to move up, when dollar starts to go down. So this seems to be fitting in nicely for the end of the bear market for cryptocurrencies and the main stock markets. That at the end of this year, we should have bottomed out, and as the dollar starts to come down, the markets will start to go up. Only time will tell. The final chart I want to show you, just as a reminder that we have to be cautious, that while this is playing out as a W pattern here, which is usually the bottoming out process for the end of a bear market, we could quite easily go much, much further down. There is one pattern that we should be aware of, which I've mentioned in the last video as well as today, and that is fading. So it may well be that we fade down below this neckline, this 17.5, and then we get a spring all the way back up above this line. That would be extremely bullish. So this little fall here gives the impression that we're going to go much further. So a lot of people start selling at this point, only to be caught out by a massive increase to the upside. So we must be aware of that. This is all very important information, and to be aware so that nobody gets caught out. And finally, the bars pattern from 2018, which I've been showing you in virtually every single video. What is that bars pattern doing now? The pattern, since we lost the 50 simple moving average in 2018, is the same as we done here in 2022. And this is where we're at currently at the moment. So we went above the 50 simple moving average at the bottom of this market here when we bottomed out at 3,100, came back down, made another attempt, lost that again, and then made the final attempt before we went on this run here. Similarly, at our proposed bottom here at 17.5, we've gone above the simple moving average at 50, came back down, made another attempt just like over here, lost that, and now in the last few days we made another attempt to get back up. So based on this pattern, we are around about here at this point. And the question is, will it continue, or will we be rejected from here and take a different course? That's the million-dollar question. The bottoming out process looks very, very similar over here. If we zoom in here and have a look to what happened over there, we made a big move here in 2018 to get above the 50 simple moving average and struggled to get above it, but once we did, we went on this run here. And currently, we made the similar move up here, and we're doing virtually the same. It really is quite exciting and interesting to see how this thing has been developing, and we've been following it now for the last 3 weeks. And it hasn't actually detracted from the same pattern from 2018. Which way it will go, only time will tell. But please be aware of this. This is very, very important information. Okay, so we'll leave it there. Thank you once again for watching. Very much appreciated. And if you found value in the video, then please do remember to like, subscribe, and to turn on the notifications bell if you haven't already done so. If you have any comments, questions, or suggestions, please do leave them in the comments below. Till the next time, take care, stay safe, and I'll see you in the next video. Bye for now.